companies to think about developing a collaborative model with the Kenyan startups and create a new kind of set of companies which really will bring in the best in both the countries. Thank you. Over to you, GI, and thanks for organizing this important session.
Thank you so much. I will keep using that phrase, innovation highway, from now on. That was an excellent opening remarks. Thank you again, Parmesh. At this point, let me bring our first speaker without much ado. Ashish Anand is the founder of Whrrl, a blockchain-driven financial inclusion lending platform for farmers focused on commodity tokenization and commodity finance. As India's largest blockchain platform, Whrrl is present in 1,500 warehouses across the country, and its transaction volume has crossed US $750 million. So, Ashish, the floor is yours.
Hi, good morning, everyone. Greetings of the day. Thanks, Jihi, for giving this opportunity, and thanks everyone from the World Bank as well as IntelliCap, BMGF for making us present what we have been building in India and how we are planning to take it to the African region, which has been a plan for quite some time. And I hope that with the support of World Bank and BMGF, we will be able to take it there. So without much getting into the background, I will start sharing my presentation. Sunil, how much time I will have?
Ashish, you have 10 to 12 minutes.
All right, perfect. Thank you. So I hope my screen is visible. We are
Yes.
Whrrl. Thank you. We are Whrrl. And as he mentioned, our focus is on tokenization of agriculture and agriculture financing. But the larger objective which we have set up for ourselves is, and when we started Whrrl, and that is the vision which we continue and mission we continue with, is to solve the distress sell problem of the farmers. And what is distress sell? We all know in the development sector. The thing is that farmers in India and of course farmers in Africa and countries like Kenya face similar challenges when it comes to selling their commodities, selling their harvest. And that's where we have been focusing to solve the problems faced by small and marginal farmers. So just to give an introduction, today we are as he already mentioned, we are India's largest blockchain platform. In addition, in some parts of the commodity tokenization space, also we have a head start even at the global scale. And so, what we do essentially, before I come here, I will talk about what we do, and then I will come back. So, as we all know, distress sell is a major problem, and this behavior of the prices of the commodities falling after the harvest and then recovering after 2 months, 3 months, 4 months period and going back to its peak just before the harvest is well recorded in almost every part of the world, in most of the emerging economies, especially where there are not very deep financial markets developed for hedging opportunities. So, what happens as a result? The farmer is forced to sell the commodities, forced to sell their harvest at the lowest price of the year, because farmers typically don't have the financial wherewithal. Don't, as a result, they don't have the holding capacity to hold the commodities for a long term when they can sell at the right prices. And this is a behavior. There was a research done by National Institute of Agriculture Marketing in India, and they found that in any season, almost 90% of the commodities have this type of behavior where the prices fall down, despite the fact that some of the countries like India have a minimum support price as well for commodities. So that's where the problem comes in, and that's where the solution comes in the form of how do we help the farmers to defer the sales? How do we help the farmers in increasing their holding capacity. That instead of selling just after the harvest when the price are at the lowest, can they sell at a, say for example, 3 months later or 4 months later when the prices are at the right average historical level? So that's where the intervention called warehouse receipt finance comes in. Uh, and this intervention, warehouse receipt finance, has shown promise across the globe in emerging markets. World Bank, IFC have been quite active in the last several years to promote that. However, what we have realized that the benefits of warehouse receipt finance have not really reached the small and marginal farmers despite all the efforts. And despite the fact that it can help increase farmers' income, as well as for the lenders, it's a highly secured product. Typically, as just right now it was spoken that risk patterns in agriculture are quite high and for the lenders to get comfort. But if we talk about warehouse receipt finance, the risk is very limited because the lenders already have a secured commodity in hand, in the hand of the, not in the hand of the borrowers, but in the hand of a third party warehouse which has a relationship with the lenders. So the lenders get an asset backed loan where the value of the asset is typically 140%, 150% higher than the loan amount. But then the question happens, why still the banks don't take the lead in doing the warehouse receipt finance? Or more than that, why 95% of warehouse receipt finance, if it exists, goes to non-farmer segment? How it becomes a tool for speculation instead of being a tool for financial inclusion. So with those objectives to solve those problems, we started working on creating a blockchain platform for warehouse receipt, where the core idea was that how do we create several aspects. One, how do we create for the lenders a risk reduction mechanism, because lenders, despite being the secured product, have seen many risk events taking place, though of course not by the small and marginal farmers, but by the large traders that the bankers like to support. However, because of that, the perception becomes that this is a problematic area where a lot of frauds take place. So using blockchain, certain properties like immutability, tokenization, etc., we reduce that risk for the bank. So we reduce the risk that the risk events like multiple borrowing, duplicate receipts, ghost collateral, all of that doesn't take place. In addition, we brought digital lending and using the smart contract properties of the blockchain, and were able to create a digital lending solution for agriculture in India. We were the first platform in India to launch a near real-time lending facility for the farmers, which nowadays being adopted by other, even the regulators of India. So that's where what we have created. We have created a platform wherein we have borrowers, which are our farmers. We have given them a mobile application, the mobile application for the purpose of borrowing, lending, trading of their commodities after uh, they have been stored for some time and the prices are back to the level. But anyway, our solution is mobile independent, or it means any farmer who doesn't have even a mobile phone or a smartphone or doesn't know how to operate a smartphone can also take benefit of the digital life. For that purpose, we have created a network of warehouses. In these warehouses, there is a computer which is placed. So the warehouse becomes a kiosk, or warehouse becomes a banking channel partner for the bank as well. This warehouse is directly connected to the bank without any repository coming into play. Using blockchain, we connect the banks and the warehouses together. We also have connectivity on blockchain for any collateral management agency, or any stock auditor or any internal verification agency. The price data of the commodity we derive from the electronic sources, typically the exchanges. In India, we also get the local market, which we call mandi prices. So all of that price also comes directly onto the platform. And that helps us to create a digital, or rather in blockchain language, tokenized warehouse receipt ecosystem, And this tokenized warehouse receipt ecosystem means as soon as a commodity reaches the warehouse and there is a first level of weight check, the quality check, etc., and warehouse receipt is generated immediately using the shared ledger property of blockchain, it gets shared with the bank, and immediately the bank can give the loan. So that is how the process has been designed for the small farmers. The verification we keep in partnership with the banks post facto, post loan, and for the larger loan we do it pre facto. So that way we can do real time financing for the small and marginal farmers. Later on, and the pledge part, pledge creation, pledge removal, all of that is taken care by the smart contract, so reducing the risk for the bank. Also, it's a digital lending, 100% no paper. It's a paperless, personless ecosystem. The farmer never goes to the bank. Everything the farmer requires at the max, he has to come to the warehouse, and the loan gets dispersed in the farmer's bank account. So later on, the farmers can repay the loan by selling the commodity on the platform itself. So these commodities can be sold online to the buyers, and the loan will be repaid using escrow mechanism of blockchain uh, by the new buyers. So the farmers also don't need to spend money on logistics cost or worry about where to find the farmers. Thereby, we are deepening the markets for the farmers as well. So we are avoiding distress sale. We are giving access to finance for the lenders by creating a mechanism where the cost of customer acquisition as well as cost of underwriting goes highly low. They were able to profitably lend even to farmers, thereby distributing their concentration risk. Also, the data is being used, can be used by the government sector for their storage planning, food security data planning, etc. Now, when we have done that, today we are at this stage where we have served more than 20,000 farmers, and we have disbursed more than $20 million loan to the farmers. We have credit line from several institutions of more than $150 million already in place. We work with several banks. And one of the few examples across the globe where banks are lending on blockchain against tokenized commodities. We just got a award of REI from World Bank for tokenization of pre-harvest finance, which is e-crop receipt tokenization. So we are starting a proof of value for the World Bank itself in the pre-harvest financing sector, which just has started 2 days back. So with this, I would like to talk about how we are looking for Kenya. So what we have done our research, and what we have found that in Kenya, certain GSOCO scheme for warehouse receipt finance have been operational since 2014. However, the impact is not very high. In 2017, taking together Kenya, Tanzania, Uganda, only 1,300 metric ton of warehouse receipt finance were generated. Though there is a storage capacity across Kenya in different parts of the counties, as we can see, in some counties it is more, but in more or less evenly distributed. It means there is a potential to create a bigger warehouse receipt finance ecosystem in Kenya, and especially using digital lending and the sort of platform that we discussed about, where millions of farmers are connected. There is opportunities for Indian agri-techs as well as Kenyan agri-techs to start working on this solution. And that's where we have our implementation plan. We already have partnered with Kessner Capital Management and Atria Fund in South Africa for lending to against warehouses. This is a debt fund. So they have already committed to start with $1 million of fund to lend through our platform when we start operating in the Africa region. Plus, they are willing to extend it even up to $10 to $20 million over a period of time. Of course, we will also require with partnership with the banks, but this is a first initial partnership which we have already created, given the fact that Kenya is a very high agri-GDP country. We are planning to, as we have done in India, we are planning to partner with warehouses first so that farmers can store their commodities. Then partner with the banks or non-bank lenders. Already one non-bank lender we have partnered. We will be partnering with more banks over a period of time. And that will solve our initial problem of storage and lending on that storage. Finally, as our technology already has a trade platform, so we can use that same, because as soon as we create a token, it becomes a tradable token. So that tradable token can be transferred from one person to another on the same platform, which is our mobile app called Andan. And farmers can trade and sell their commodities, repay their loan, get benefits. So the core idea is, how do we get farmers to get better prices than exist at the time of harvest? That our plan is to roll this out over a period of 100% roll it out over a period of 6 to 9 months after pilots, which will help us to also go to other countries of Africa region. So with that, I would stop over here, and if there are questions, I would love to answer them. Thank you.
Thank you, Ashish. We will wait for the Q&A session, but there are already some questions posed for you on the chat line. So if you would like to answer them directly on the chat, please go ahead. So let me bring in our second speaker. Sorry, I'm gonna butcher your name, but Kumarjit Mazumdar, Head of Sales for Agriculture Data Solutions at Satsure. Over the recent years, Kumarjit has collaborated closely with agriculture lenders, insurers, input suppliers, commodity traders, government agencies, and social sectors to improve efficiencies with both India and global markets. So welcome, Kumarjit. Let me learn how to pronounce properly, and the floor is yours.
You did a pretty good job, GZ. It's Kumarjit, you're right. Yeah, so good morning and good evening, everyone joining in from Africa and India. I'll just quickly take you to the PowerPoint. Yeah. So I'll begin by giving a brief introduction of Satsure. We started in 2017, and we are a Series A funded company. Over the last couple of years, we've raised about 20 million from some of the marquee investors, and we are very, very fortunate to have some of the leading banks of India to invest on us. I'd also like to mention that one of the largest credit bureaus around the globe, TransUnion, is also our investor and have significantly helped us develop our products and offerings for the financial inclusion on the agri sector. On the employee strength front, we are about 150 people, data scientists, remote sensing experts, engineers, and business alongside working to shape up the products at Satsure. At Satsure, we are building it on the 3-layer front. So we believe that, in order to scale not only in India but globally, one of the major levers is going to be having complete freedom on generating your own data, and therefore, Satsure has been working very, very closely with our own subsidiary company, Keledio, and we are on our way to build our own satellites and payload by 2026. And what that means is that by another 24 months or so, we would have our own independent source of generating very high quality optical and high resolution data. With Keledio coming in, we have a layer of platforms, and these platforms are basically enabling us to build very ready to use plug-in data products which can be used across the agri value chain to kind of benefit and make data-driven decisions. And the last layer is the data solutions, which is Satsure, Skies, and Sage. Sage is largely the farm credit management software that we have and caters to large banking institutions and agri lenders, and Skies is majorly on the infrastructure monitoring. So what the clear roadmap at Satsure is to build a very integrated platform of having our own data to having our own data refinery and processing to generate and give out very high quality data solutions to agri players across. Here's a snapshot of the impact that we have already created. We have about 2 patents already in US and in India. We have applied for 4 more. Thus far, in the last few years, in India, we have processed data worth of 85 million hectares. We have done analysis for more than 3 lakh villages and continuously monitor about 200,000 villages on a monthly basis. We have, analyzed more than 2.1 million plots. We have customers in the US, LATAM, India, Southeast Asia, Middle East. On the right-hand side of this chart, you can see that some of the marquee names we have been associated with on the agribusiness front, some of the agri-finance and insurers, so all the large banks in India, bureaus, large agri players, utility players. And we have been also fortunate to work with government and multilateral agencies. So we have had the opportunity to work with IFC, MasterCard Foundation, GIZ, and also with the Ministry of Agriculture in India. So when we started this journey, we started by understanding that the problem is in India. The problem is that Indian agriculture employs about 50% of country's manpower strength, and the contribution to Indian GDP is just about 20%. So therefore, there was a lot of room for improvement and efficiency in the system. And RBI, despite all their initiatives, only 40% of India's small and marginal farmers could have access to formal credit. So we wanted to ensure that a large number of farmers get access to formal credit, and a technology could play a significant part of it. So that's how we started the journey, and we kind of built a lot of solutions around it to enable banks in reaching out to farmers to be able to take calculated risk and also give out credit at the right time and at the right price. We foresee, and we have done some kind of research in Africa and Kenya as well, and we see that very similar trends arrive there as well. So the key challenges that we identify in Kenya is one, there's a very limited access of formal credit, just like in India. In Kenya also about 30% of the smallholder farmers have access to formal credit. Majority of the African farmers rely on informal lending, which comes at a very high cost of interest and credit. So it can go up to 30%. This is as per the World Bank records. And inconsistent repayment rates and high default and NPA continues to be a problem for lending and agri lenders in Kenya. Along with this, we all know that rural is a very challenging place to operate, and therefore the presence in rural has been a challenge also in Kenya. And about 70% of Kenya rural areas have lacks the access of having formal banking services. So we plan to solve some of those and replicate our learnings that we had in India in Kenya and take that forward from there. So what have we been doing in India? Majorly, our solution is across 4 major sides of agri lending analytics portfolio. We help financial institutes in kind of identifying potential areas to really expand their business. So we have a lot of data using satellite images and weather parameters. We have been able to rank and give certain amount of weightages to be able to arrive at villages and their rankings across a particular geography. And with that intelligence, we are able to give out very, very classified and straightforward information to the banking sector, where they could understand on their expansion plans. So we give new branch location intelligence. We give them village level analytics with which they can build their underwriting abilities. We give them very, very qualified farmer leads to expand their books and also help them improve their portfolio. In terms of risk management, like I said, at a farm level, we provide about 30 to 35 very specialized parameters, which includes socioeconomic parameter, agricultural parameter, and weather parameters. And using these parameters, one can, write their underwriting rules and reduce the risk while lending to farmers. On the collections and monitoring side, I think we have a very, very strong and offering wherein right from the time of sowing to the time of harvest, we monitor the areas of interest, whether it is a region or a province or a village or a plot. And at every monthly frequency, we provide intelligence in terms of how the sowing is looking like, how the crop health is, how the yield is likely to be, and therefore, when the harvest is looking like, and therefore how much the farmer is supposed to make. We do a lot of predictive monitoring as well, and also share post-season insights. So in the next couple of minutes or so, I'll try and stress on our flagship product, which is the Satsure. And here, what we understand is that for large agri lenders, the major problem for them to scale their agri lending book is basically threefolds. The first is that underwriting or ability to give out a loan in a rural market takes a lot of time and a lot of effort, which includes reaching out, doing any kind of physical verification, understanding the credibility of the farmers, etc., etc. What we have basically done is we have built Satsure to be able to address some of these issues of verification right at a click of a button. The other problems, of course, remain whether to understand how the farmer is using the credit which has been extended at the real time, how is the use being monitored, etc., etc. And the comprehensive report that we bring to the table gives an understanding to the banks on how the farmer and the plot has been performing over the last 6 seasons, and what is the propensity of the farmer to repay, and therefore it kind of reduces the inefficiencies of the underwriting process and kind of fast tracks the entire lending journey for the farmer. So what does the Satsure report does? The Satsure report does give a detailed analysis on the health and productivity of the agricultural land parcel. It kind of monitors the changes in terms of the land use, crop conditions, whether the acreage has been increasing or decreasing. It kind of helps them understand and reduce their default rates. So there is a farm score that we give out to each report. And this farm score is basically much like a score with which they can, kind of take their lending decisions. It kind of helps streamline their underwriting process, and also using Satsure, one can enhance their overall credit management process, like increasing efficiency, improve productivity, and reducing the loan, dispersal cycle. So here's a large list of parameters that we do, right from regional level details. We give out in this report, we give out state, district, tehsil, village or province, the survey number, the area, farm centroid. We give away agricultural parameters like the irrigation condition, the number of times the crop has been grown in a particular year, the crop name, the price at which the crop has been trading, the MSP, the performance of the crop for the last 6 seasons, the yield, the comparison of the farm yield to the district yield, the comparison of the crop to the performance of the crop at a district level, the average crop yield over the seasons. We also give agricultural parameters like rainfall, groundwater, soil moisture, and thickness. We, along with all the agricultural and the climatic parameters in this report, we also give away very critical regional parameters, which kind of helps us understand the propensity of the farmer to repay. Like, for example, we give away insights like the nearest mandi or the nearest market from that plot. We give away the distance or the actual distance from a road or a rail network. We give away the proximity to the nearest water body. We also populate drought instances, village population, the agroclimatic zone, the type of soil, and also regional prosperity index using various input parameters like nightlight index. So all of this put together, we kind of build in this report, which helps banks which helps bank take very informed decision about the performance of the plot and the farmer and his propensity to repay the credit on time. So let me take you through the report. So this is a sample Satsure's report. Right at the beginning, top left, it gives you a good understanding of how the farmer is performing. All the input that this report needs is the khasra number or the plot number or the survey number. And once you feed this in, it gives you the details of the risk associated with that number or that plot, the farmer plot. It gives you the average Kharif score and the average Rabi score, like how Kharif and Rabi crops have been performing. Post which it gives you the detail of the farm, like the region, the survey number, the area under cultivation, irrigation condition, and the number of times the cropping has been done. Post which you get a very detailed understanding of the last 6 seasons and what crop has been grown in that particular plot year on year, season on season for the last 3 years. And along with that, it also gives you the price of these crops. And if you were to multiply the price with the yield, which is also given here on the right hand side of the report, you potentially also understand the income of the farmer. It also gives you the performance of the crop, which is to understand the health of the crop in that particular season. The moment you key in the farm number, it kind of geofences and gives you the exact location of the farm and where it is at the moment. It also gives you the centroid point. All the survey details are listed here. It gives you all the adjacent plots and the direction and the khasra for those adjacent plots. It gives you the farm phenology curve, so how the health of the crop in that farm looked like throughout the agricultural season and how the crop moisture looked like throughout the season. So if there was a dip, any kind of pest and disease attack or any kind of crop stress, it gets captured here. And along with that, it gives you the rainfall trend, the groundwater trend, all the regional parameters, nearest mandi, proximity to the rail and the road network, major water body, drought instances, population, the type of soil, agroecological zone, and regional prosperity index. So basis all this, it gives you a very robust understanding about that farmer. And this report is available to the agri lenders for them to kind of have a very good understanding of how the farmer has the propensity of the farmer to repay. And this report is also a proxy to the proxy indicator to the income of the farmer in that zone. So we use remote sensing technology to understand and classify the crops at scale. India is a huge country. And we do this at scale for over 3 lakh villages in India. So therefore, we have our own crop classification algorithms. To begin with, at the moment, we classify paddy, wheat, cotton, groundnut, sugarcane, soybean, mustard, coarse grain, pulses, and maize at scale. We are also able to, kind of classify land cover. So agricultural and non-agricultural land, plantation versus horticulture, aquaculture, water bodies. We are able to understand the built-up area in particular villages to be able to arrive at all these analytics. So all this is available to us in a click of a button, also using API. So a lot of the banks in India and agri lenders in India have associated with us through API integrations. So all that they can do is call the APIs and we give them the result. They can alternately also have access to this very user-friendly dashboard where they can just go and enter the area of interest and search. The moment they search, they land up on the plot that they are looking at, and all the analytics are available in a click of a button. Now, we also had this challenge in India where we understood that a lot of the plots are not digitized. The farm boundaries, availability of a farm boundary is a problem. So we have built Sparta Maps, which is a farm digitization tool, which is very, very easy to use. One can actually just take this app and using this app geofence any area of interest, be it a polygon, a track. They can just geofence all of this. They can actually build and put more attributes into this platform using this mobility application and create all the details. And once this geofencing is done, we can use satellite images, very high resolution satellite images going forward, and give them all the analytics in a click of a button. We have also been working with a lot of banks on the sourcing side.
Martin, I am very sorry, but could you kind of wrap up in the next 3 minutes?
Sure. On the banking side, I think we have built a regional ranking, models. So we can classify the villages into good, moderate, and not so good. So the banking and the agri lenders can take their strategizing decision, optimizing decisions, etc. We have the ownership details in India. So we also do give away very high quality, credible leads to agri lenders. And we plan to do that in Kenya as well. So our plan for Kenya at this moment is very simple. We want to go out there and expand our offerings and replicate the success that we have got in India. So we want to use real-time monitoring using satellite imagery and imagery tools to be able to give away these analytics, predictive analytics. We want to help startups, government build credible credit scores and build them at scale and build digital platforms, agri-digital platforms, and help financial institutes grow and expand their business in Kenya and broader Africa. This is a small testimony from TransUnion, who is also our investor on board and one of our marquee customers, been using us and helping us distribute our solution across to the banking channel. Thank you. I'm sorry if I've exceeded the time, but that's all from our side.
Thank you so much for this insightful presentation. There are a lot of questions coming on your to your way. So if you can answer those in the chat line, that will really save us some time. Now let me bring our final speaker, Tara Keswa. Sorry again, I'm going to butcher your name. Yeah, he's the CEO and co-founder of Dvara E-Registry, and he spearheads development and strategy and builds profitable partnerships with banks, NBFCs, insurance companies, and government, and manages a team of resources to design solutions that cater to the financial needs of the rural and agriculture segments. So, Tara Keswa, the floor is yours. Please be mindful of time.
Yes.
Thank you.
Thanks, dear. And thank you. Good morning and good evening for all the panelists and the participants. And thanks to IntelliCap, World Bank, and BMGF for giving me this opportunity. So to introduce myself, my name is Tarkeshwar. I'm a co-founder and CEO of the Dvara E-Registry. So let me share my screen. Let me jump into the presentation. We are a full stack agri-fintech platform that enables smallholder farmers to the markets. So when I say smallholder farmers, the farmers who are having less than 2 hectares of land. And when I say the markets, enabling to the markets are credit services and input and output connectivity to these farmers. So before that, the kind of similarities between India and Kenya are the smallholders in India contribute 86% of the farmholds and our households. Kenya is also very similar, 75%. And average land holding in India is 1 hectare, even less. Kenya is below 2 hectares. The challenges, again, mostly are similar. Limited access of formal financial access to the smallholder farmers. The huge data asymmetry between the financial providers and the finance seekers. And again, for the farmers' problems also very common: low land holding, erratic weather patterns, unpredictability of the weather, and the same climatic conditions. So what we have trying to resolve in India is we built a platform, full stack platform for the farmers and the FPOs. And one side we are bringing in the financial institutions, and the other side the value chain companies to this platform that provide credit, insurance, input and output, and as well as advisory services. This is broadly, in a simple terms, what we are providing in the full stack platform. To just show the numbers, I wanted to reiterate the 86%, the last line of the pyramid, are the smallholder farmers. Of this, only 29% of the smallholder farmers are having the access to the formal financial sources. That means majority of these farmers of this segment are borrowing, are doing the agriculture, but borrowing from the informal sources for agriculture. So kind of opportunity we are having, this is a problem, but we find this as an opportunity. One, we are intervening through the community organizations that are called FPOs, where the government of India has given a huge thrust on bringing the majority of the farmers into the FPO bracket. And the Indian agriculture input space is growing at 8%, and it is expected to reach by $20 billion through FPOs. And credit and insurance services, I need not to tell, because the 70% of the smallholder farmers still depending on the informal sources. So the approach is building a full stack platform where the platform has 3 components that are interlinked with for the various services. One, the platform has 3 components, that is FPO stack. The FPO stack essentially collects the farmer data and onboarding the farmers through this platform. And it's a kind of, it will have all the static data of the farms, demographic data of the farmer, and KYC of the farmer, digitization of the farmland. Entire data of the farmer is being collected at this level in this stack. And digitization of his business, when I said digitization, what kind of crops he's doing, season on season, what kind of methods is using, and including the traceability of the traceability. That means we are collecting the farmer data at a cultivation operational level if it is required. That platform has that capability. Third, this platform is being used for the ERP as a ERP system for the FPOs. FPO can use this platform for taking the various decisions and operating themselves. So once these farmers, then the second platform we call analytics one, where the farmers are being onboarded. And these farmers are required various services, input, output, and credit. But credit requires a separate concentration and separate way of treatment. So we put the analytics tags where it will filter these farmers as a credit worthy and unworthy. The credit worthiness of the farmer is based on the KED score. We call this is essentially remote sensing data we collect and build that productivity of that farm, and we call it a KED score. And the farm data, FPO transactions, any other data we use for the filter of these farmers as a credit worthy and unworthy farmers. Only if these filtered farmers will move to the lending stack. This lending stack is connected with the banks, where these farmers underwriting happens in this lending stack, and document and signings, everything happens in a digitally, and banks can disburse these loans, financial services digitally to the farmers' accounts. I just spent some time on the FPO stack, essentially because this stack is to provide the various services to the farmers through the FPOs. So it essentially has a web application and Krishak Sathi application. There is an application where the Krishak Sathi, our field representative or FPO representative, can do this digitization and collect the data. Third and most important is a farmer app. So all these three components together we call FPO stack. FPO stack is an information backbone. As I said, it will act as a ERP for the FPO, including the accounting, and it will tell the kind of decisions they have to take and kind of inputs they have to procure and timing of the output procurement and selling to the connecting to the various buyers. And even there can be various linkages, warehouse linkages through this platform. Now, analytics stack essentially for analyzing the farm productivity, because most of these farmers doesn't have a credit scores. As on date, most the financial institutions classifying a credit worthiness based on the credit bureau reports. But this segment doesn't have those credit reports. So we wanted to build an alternative credit scoring methodology where we call a KED score, where identification of the land we do either by kind of a government database, or there is an app to collect this identifying the land and digitization. Once the digitization of the land completed, we derive the data from multiple resources, including the remote sensing, and using the algorithms to get the specific outcomes. One of the outcomes is KED score, which is a kind of filtering tool for the farmers. And there is a specific underwriting tools for the agriculture loans, kind of a land use, and what kind of crop is being grown, and how many seasons being cultivated. And if a kind of a seasonality factor, if a farmer is coming for a Rabi loan, we see that whether the last 3 years any of the season he has cultivated, then he's been approved. So the kind of credit mechanism we have built purely on the remote sensing analytics to establish the farmer's agriculture activity. Just to show what are the parameters we have used for the deriving the KED score.
Please conclude in the next 3 minutes.
Fine.
Thank you.
The KED score is underwriting tool, and to show this lending stack has a complete all the features from the loan origination to collections. It has a complete features, and currently there are 5 financial institutions we have tied up to use this lending platform for a disbursing a loan. So it has got a complete farmer need not to put any kind of physical document. It's all completely digital. Farmer need to spend about 30 minutes on the app. Then if he is eligible, he will get a disbursement directly to the bank account. This is just to show what kind of impact we are creating. There are more than 30% we have disbursed about 16,000 loans to the platform, and 30% of new to credit. They have never get the loans or financial services from the formal financial institution. This is the kind of impact we are creating in a smallholder segment. So what kind of contribution we can do? We can provide a kind of a underwriting tools to the institutions in Kenya, where the lending opportunities are very similar. And we can also look at the technology, the ERP system of the farmer aggregators, that is called FPOs, to extend the similar organizations in Kenya. And we are intended to offer a complete digital segment, digital platform from the origination to the collections and fulfillment, give it to the institutions. It is similar kind of organizations. If they want, we can provide it in Kenya. This is just to show the numbers, to show the impact. We have serviced 7,000 farmers for the credit services. 6,000 farmers have been linked to the inputs or output through the platform. Remaining, you can see that these are the impact we have created so far. Thank you.
Thank you so much for this insightful presentation. In the interest of time, please, if you could address some of the questions asked to you on the chat, that will save us some time on the Q&A session. And at this point, let me invite our two discussants. First, Siddharth Chaturvedi, a senior program officer, Agriculture Development Asia at the Gates Foundation. He leads the portfolio of investments in Sri Lanka and Bangladesh. So without further ado, Siddharth, the floor is yours.
Am I audible?
Yes, we can hear you.
Yeah, thanks a lot. I think very interesting presentations from the startups as usual. Keeps us excited all the time. So congratulations on your work, and great to see that there's an interest in Africa. So and thanks to obviously World Bank for partnering with us on this and taking this very important agenda forward. What I would be talking about is more on the South-South collaboration and how we are looking at it. And before I do that, I would just like to say that the agriculture team within BMGF is quite diverse, and I'm part of the ECS Asia and Africa team. What that means is ECS essentially means enabling country systems, and our job is to can you hear me better, Shaukat?
Yes,
Yeah.
we can hear you.
Yes, it is better.
Okay. So our job as enabling country systems is to understand the country needs and work with our R&D teams and other teams to ensure that it lands in the country the way it is supposed to land. So some of our verticals are around crops R&D, livestock, digital farmer services. We don't call it financial services, digital farmer services, and varietal improvements, wherein we have deep engagements with institutions like CG. And I think there is enough and a lot written on what the R&D impacts have been. So one of the things that we are looking to do in the South-South collaboration is that South-South is not looked at only from the agriculture lens. So we are looking at South-South collaboration as a two-way map wherein we can share our learnings from India to Africa and also from Africa to India. Second thing is that we are looking at what the country needs are and try to meet the demand that is there, rather than say we have the solution, so where is the demand for that? So it's not like a hammer looking for nails. We are trying to see what essentially the demands are, and if some of those demands can be met through some of the technology needs. And as I said, this is not being done only by the ag team. This is a more broader, this is a wider effort wherein our policy advocacy team, our DPI team, which is a newly formed team, and the agriculture team are in unison to solve for some of the pressing problems of the smallholders, and those problems have been well articulated by the startups earlier. One of the principles of that is that we are not alone on this, and we are not the first ones to have started thinking of South-South collaborations. The second is that we are trying to learn from experience rather than build a framework in which everything kind of comes and fits. Therefore, the South-South collaboration work that we are trying to do, of which Kenya is a part, and Ethiopia and Nigeria also are our focus countries, is we are looking at working with some of the startups that you've heard from, some of them who are not here. There have been a robust selection process of some of these startups with the view that is there A, interest, is there B, a mentality, or in their business plan, is it called out that there is a move towards Africa? And what is the support that they would need to do the same? So that's the implementation piece. In the next 18 months, we are trying to work with some of those startups and see if they can land in Kenya and also Ethiopia and Nigeria based on what their business plan is, what the country needs are. Can they actually sit in Kenya, work there, and see what does it take to build the plumbing or the foundation of the innovation highway that Parmesh mentioned earlier. The second piece is, as I said, we are not alone on this, and our partners, IntelliCap, have really very well laid out the various pieces that would be needed to support some of these startups. So as I said, implementation is one big piece, and we are also looking to build an alliance which is both around knowledge and around funding. So while we can look at alliance partners only as funding partners, specifically, for example, the World Bank, we are essentially looking at World Bank more as our delivery partners, as people who understand the ground better, who have relationship with the counties, and they can help us identify the real problems that need to be sorted, and of those problems which can be sorted by some of the technologies that have been developed in India. And the third piece is around data and knowledge. I think Parmesh has been mentioning it for the past whatever years I know him for, and World Bank has been talking about it, that while there is data, is there knowledge, and if there's knowledge, is it being shared? And what does that sharing really mean in the South-South context? So what that would mean is essentially measuring impact in the way that the government wants to measure it. So from a South-South lens, and that's why I'm here, financial services obviously is a very big piece that Kenya has an issue, and that issue cannot be solved alone by technology. Obviously, there is a need for collectivization, there is a need for a lot of government intervention, and that's where our policy advocacy teams also step in, and we want to unlock some of the G2G work that is being done. For example, India just extended a $250 million credit line to Kenya. So where does some of this innovation work land in that piece? And that's where we want to continue playing the catalytic role that the foundation usually plays. The second piece is around that if we do have these alliance partners with us, that's where the sustainability of such a platform may come through. So we are very clear of the fact that the principle of risk sharing with the startups has to be there, that the South-South agenda has to be private sector led, and it has to be country led from a demand perspective. And in this, we have identified certain themes, of which financial services is one. We are also focusing on irrigation as a very important piece, the lack of irrigation, if I may say so. And then there's a third piece, which is more around the DPI piece. So while Ethiopia has really taken off on the UID piece, Kenya is yet to take that up. And then there are some of the advances more on the ecosystem side. For example, our investment with IAIN or Social Alpha, as we call it, There have been some very good technologies coming out of there, and also how they have been able to bring together some of the ecosystem partners. And the last piece is that, again, we are not alone on this. It doesn't mean that there is no ecosystem in Kenya. What we want to do is to see how does the ecosystem of India and how do the startups of India really complement the existing startups that are there in Kenya. So this is all theory right now, and this is the theory that we want to test. But hopefully we'll get to the highway that Parmesh was talking about. Thanks a lot.
Thank you so much. I think the next discussant is precisely the person who could really talk then on the government to government unlocking of the South-South collaboration. Let me introduce Bernard Lagat, County Executive Committee member of the Ministry of Agriculture in Kenya. Bernard, the floor is yours. Please, let's have 3 to 5 minutes to yourself. Please be mindful of time. We're running behind the time. Thank you. Bernard, the floor is yours.
Thank you. Can you hear me well?
Yes, we can hear you.
Thank you. I hope I'm able to. Yes. Thank you.
We can
I
hear
hope
you.
you can hear me well.
Yeah,
Thank you
and
so
we can
much.
see you. Please
Thank
go
you.
ahead.
Sorry. Yeah. I just want to say I appreciate this opportunity to share with you, and following the 3 presentations which I have followed keenly. I want to thank the 3 companies for the insightful presentations they have presented, and also the remarks by the representative from the BMGF. I think the South-South collaboration, as it has been said, is really something that it's long overdue for us in Kenya. We really need to leverage on the progress that has been made by most of our colleagues in India. And we are quite aware about the progress that most of the farmers have made in regard to production, productivity, access to market, access to affordable finance. And I think the issues that are there really resonate very well with us here. Personally, I've never had a chance to visit India, but I've read a lot about India. What we are doing, like in my county government, we are trying to organize our farmers alongside the concept of the Amul dairies in India. And it's been really a success story that we're trying to see how to also learn from it. And I had a chance the other day also to get a support from the BMGF to visit Uruguay on the beef industry. And I think the partnership between World Bank and BMGF would be great for all of us, especially in Kenya, to ensure that we borrow from the best practices, some of the latest innovations and technologies that are suitable for us here. Because I strongly believe in the so-called reverse innovations. What works in developing countries may not necessarily be uptaken immediately, even in the developed countries. But if we collaborate between ourselves, between developing countries, we'll be able to even fast track our progress much easier. So I think from the 3 presentations, yesterday, coincidentally, we are running exhibitions and seminars in Bungoma County, where on Saturday we are celebrating our 61 years of Madaraka in agriculture. And yesterday, and opportunities to improve on our agriculture sector performance. And Kenya is at the verge of that transformation with the support of the partners like BMGF and the World Bank. We are seeing a lot of progress taking place. And thanks to support we've had from Pamesh and the team, we have now managed to register and the thing is that if the government knows who the farmer is, what he does, how he's doing whatever he's doing, what are the priorities of this farmer, it becomes agriculture finance corporation, but it has not been able to target its services to the farmers at the bottom. The president now is popularizing the agenda of the bottom up, where we want to be able to uplift those communities at the bottom in terms of economic status up. But you see, what we have realized is that it's not very easy to reach the guys at the bottom, especially the farmers. And I would give you my analysis the other day on the government subsidy of fertilizer. I realized that about 40 to 45% of my farmers did not actually have access to the government subsidy. And when I analyzed further the character of this farmer, I noticed that these are the farmers owning less than 1 acre, not hectare, 1 acre of land. They actually could not access the government subsidy because the government subsidy was giving a subsidy package of 1 acre and above. And the distance the farmer needed to cover to access the fertilizer was not making sense for this smallholder farmer because he had to pay the transport cost. The other thing we noticed also is that these farmers are actually accessing input from other entities who are agents, actually, who are giving them on credit, and they're giving them a package that probably they have done soil testing, they have leased guarantee. But if you look at the cost of that finance, of the credit, you notice that it's very high. So still, the government is not able to package the product correctly that can target these farmers that we mostly need to be able to reach. So really, I think we have a lot to learn. We want to see how the private sector can play in being able to reach these farmers that the government cannot even reach, and how we can repackage, even if the government still must continue to give some of these subsidies, what is the best way it can do so to be able to reach these farmers. Otherwise, I believe in the potential of the farmers. I believe in the in leveraging the technology and the innovations that can be used and can be adapted to the conditions that the farmers are in, and you should be able to, with that, target them and probably enable them to access better markets. You should be able to enable them to access technologies. You should be able to enable them to even leverage on market incentives like the traceability, accessing even premium markets, getting better prices. So I see the technology for me helping other than just credit finance. We should be looking at other incentives that can come with it, that can integrate this farmer not only to the national market network, but even the global value chains where they're able to get even more benefits. So thank you so much. I look forward for this South-South collaboration, and I believe the team, the companies will still probably create an opportunity for us to meet face to face and identify areas of our collaboration. But I see a lot of potential in this for us here in Kenya. There is a lot of awakening now among our farmers. More and more farmers are organizing themselves here in Kenya into cooperatives. Every day, I am in charge of cooperative development also, and other than agriculture and livestock and fisheries. And I'm seeing each and every day more farmers registering into producer organizations. They are seeking more to produce even the cash crops for export. But the challenge will still be how they can meet the requirements of those markets, the issues of climate change, adaptation, issues of sustainable land management, and so on and so forth. So I believe the ecosystem that exists in India, we could leverage on that to improve on ours. Thank you.
Thank you so much, Bernard. To conclude your remark with a very hopeful message that farmers are awakening. So since we've lost a lot of time, let me jump to the Q&A session, a very brief one, also because a lot of them have been addressed already in the chat line. So first one is for Satsure. How much does it cost from the farmer's perspective to use this model? And is it on the subscription basis? And what is the revenue structure for it?
At the moment, the reports are available for the agri lenders to access, and therefore there is no cost to the farmers. The report solves for the data insufficiency problem while giving out agri loans. So therefore there is no cost to the farmers, in short. To the agri lenders in India, the reports costs a fraction of the fees that they charge to process these loans. So depending
Hello?
on the
Sorry, Bernard, could you mute yourself?
Wow.
We hear
I'm not
background from your
around.
side. Bernard, please mute yourself.
yes.
Going
So
to-
the revenue model is
I was in Kasabet up to
Sunil, could
Luckily,
you
I
mute Bernard?
there around
I'm trying to unmute him, but I think there is some challenge here.
yeah. So the revenue model is
Yeah.
pay per use, and we deal with agri lenders with this solution. So farmer does not have to pay anything for this. I hope that answers.
Yeah, thank you so much. Then others are actually paying for the model. Others who do use the report to then create the credit line. So how is actually the business model of that cost being paid to you and your revenue then structured?
Kim, I'm sorry, I could not get you.
So
Can you
I
repeat
think
that for me?
the next question related to that is really the business model or the revenue structure. So by you're generating these reports, which is very costly from the business side also, but from the consumer of these reports, how is the fee paid or not paid, or is it by subscription? So there should be a revenue generation from that report as well, no?
Yeah, absolutely. So largely we kind of work with the financial agri lenders, and we charge these agri lenders on pay per use. So every time they fetch our report or download it from our portal, we kind of charge them on their use. So it's not the revenue structure is purely not subscription. It is only by use to financial agri lenders. Does that answer?
Yes, thank you so much. So it's more pay as you go.
That's right.
Yes. Okay, so our last presenter, kindly indicate a user case with FPO stack has been well adapted. And Kanarka also invite you for strengthening FPO's performance. I don't understand this next question very well. If he or she wants to intervene directly, please go ahead. But yeah, the floor is yours for the registry.
Is it a question to me?
Yeah, Taraka, yes, to you.
Fine. So the FPO stack has been adopted as of now by 203 FPOs in India. Of this 203, we are lending about 80 FPOs. Through those FPOs, we are lending to the farmers. So institutions like World Bank, they're using under the TNRTP program in Tamil Nadu, the stack there. And Walmart Foundation has implemented the stack for their FPOs, about 13 FPOs. And there are other institutions, they have taken this stack as a ERP solution. So it has got multiple use cases. One, they can use the stack as a ERP for the FPOs to run their business. And they can use this FPO stack along with our services, input and output connect. That's a different second model we are adopting. Third, if the FPO has agrees, they can use the stack as a ERP solution, input and output connect, and for a lending to their farmers. So there are 3 use cases are there currently we are adopting in India. Under these 3 use cases, there are 203 FPOs are there as of now, and number is increasing day by day.
Thank you so much. If there isn't any other burning questions, I see the chat window has been quite active and a lot of the questions has already been answered. I think I will close this webinar with a very short remark from my side. Thank you again all for participating in today's insightful webinar on digital financial services, which we hosted in partnership with the Gates Foundation. We appreciate the valuable contributions from all our distinguished speakers, Ashish, Tarwakeshkra, and Kumarji. Your presentations have highlighted the transformative potential of digital financial services in enhancing financial inclusion and agricultural innovation. And special thanks to our discussants, Siddharth and Bernard, for sharing your perspectives and enriching our discussion. We hope today's session has provided you with new insights and ideas and networking opportunities on how digital financial services can support smallholder farmers and drive economic growth. The collaborative efforts between India and Kenya demonstrate the power of South-to-South cooperation, creating an innovation highway, as Parmesh put it, that links these 2 countries in leveraging technology for agriculture development. Please remember to visit our website for recordings of previous sessions and today's sessions as well, and additional resources such as some of these presentation materials. We look forward to our continued engagement with you in What's Cooking Digital Agriculture Learning Series. Thank you once again, everyone, for joining us today, and have a great day ahead. Thank you.